This next startup you'll meet is using AI to predict the impact of legislation on industries and companies. Please welcome Echo Ridge.
I'm Jeffrey Allen, the founder and the CEO of Echo Ridge. Through our U.S. legislative prediction product, we demystify how government regulatory action will affect companies and markets. We have two examples here. On the left is a company called Drizly, and on the right is a company that many of you may know called Juul. To the left, we see what happened during the course of the COVID pandemic when 15 state legislatures legalized the delivery of cocktail beverages. And during that period, you can see the very quick and sharp rise within the valuation of Drizly. On the right-hand side, we look at Juul. Now, interestingly enough, that peak there actually represents an investment that was made into Juul for, I think it was around $12 billion or so. And very, very quickly after that, we see a precipitous drop-off in Juul's valuation. And there's two data points on there. The first is a piece of regulation that was passed by the FDA, the second by Congress. And in between that, a handful of states also outlawed flavored vaping products. And we can see it drop all the way down to $5 billion in valuation. This is how regulation and legislation affects companies. The problem is, at any given time, even right now, there's about 120,000 pieces of legislation which are pending in the US across all 50 states and the federal government. From those 120,000, though, only about 50,000 will actually affect businesses. And from those, we only expect about 7,000 pieces of legislation will pass. When those 7,000 pass, 65 companies from the S&P 500 will be affected. Now, the question is, which 65? So to be able to get from 120,000 to 65, this is where we come in, and we do it very well. Our ability to predict accurately the outcome of legislation with up to 97% accuracy, and then from there, be able to weight it and tell you which way is it going to affect companies. Is it good? Is it bad? And lastly, which members of Congress are trading stocks in these companies? That itself is a very telling factor. So here's a few facts about the data we're offering. We're currently covering 122 sub-industries from the GICS Level 4 classification of sub-industries. We can look out about 12 months in advance to tell you what's happening in the future with this legislation. Currently, as I said, we're covering all 50 states as well as the US Congress and then a handful of regulatory bodies as well. And we're additionally covering 3,250 tickers that are traded on the New York Stock Exchange as well as the NASDAQ. And the most important part of this all is that we're not relying on materially non-public information for this data. This is publicly available data, so it can be used freely within trading. This is an example of the type of companies that rely on the data that we provide. Mostly hedge funds, private equity funds, general financial industry concerns, as well as a few corporate interests as well. And I think it speaks best when we look at what our paying customers are saying. So here we have Tusk Ventures, which relies on us and our data for a SPAC that we're involved with. And you can see from this that we're bringing a certain level of independent verification through our data, which helps reassure investors as they're investing within the SPAC. And that ultimately is the type of capability we are bringing to financial markets. This industry is growing quickly. If we look back at 2018, there was about $280 million in business done. This year, $1.2 billion. By 2028, we're expecting to see growth of about 57% for the entire industry as a whole. We are right there on the forefront of this opportunity. And in terms of the team that's bringing this to market, myself included, we're also able to bring a very excellent amount of experience within startups, the corporate world, as well as financial markets.